और इंडस्ट्री के जो स्टैंडर्ड्स रहे हैं इस बार उसके सामने हमारा परफॉर्मेंस जो है वो अच्छा रहा है। तो शुरुआत यहीं से करते हैं सर। ओवरऑल कैसे नंबर्स देखे आपने और कहाँ से सपोर्ट आता हुआ दिखा है?
Good afternoon all. Thank you for inviting us to share the update to the CNBC Bajar team. The current situation in IT industry, there were a lot of news about uncertainty and what is the demand situation. At present, we are not seeing any impact on our demand situation. We feel the demand is still very, very strong. As mentioned in the last quarter also, the major issue was on the supply side. The good part for this quarter is our attrition has come down from 30% quarterly annualized to 24%. We see the demand to continue at this trend for the next couple of quarters. Very strong momentum is there, and we see we will be able to meet our broad qualitative guidance what we gave in the beginning of the year about the revenue growth. On the profitability, we have guided that there will be an impact on the EBITDA due to the cost increases due to the supply side constraint, as well as due to the investments what we are doing for the future, what we have been doing it. Considering this, the performance on the EBITDA side has been good for us. We have been able to observe thanks to the rupee depreciation against the dollar, and we expect that there further more investments may happen for us in this next few quarters. However, our performance on the revenue growth will help us to compensate the impact of the investments or additional costs to some extent, whatever is possible. Since we don't give a broad number guidance, we believe that our performance will be a better in the top echelon of the industry. That we continue to believe that. The second part is our India business is doing really well. They have been consistently doing for the last 7-8 quarters. They have consistently performed. Their ROC has been very good, and they are continue to grow very, very, very strongly. So we believe both these businesses are very strong, and very strong performance in the top echelon of the industry is expected.
Okay, definitely. Now let's discuss about your IT services. We are seeing that there is some contraction of margins, and we have seen that across the industry this has been the case. First quarter historically has been like this forever. There are some impacts on margins whenever possible. So can you share the details, what kind of expectations we can move on from here, and is this because of the wage hike and all the extra expenses?
Yeah, we have mentioned that there will be a wage hike in this quarter.
Yes.
The first quarter also had some portion of wage hike. And also we have mentioned very clearly that we have invested on senior management, new CEO, CMO, CRO, we have CHRO. So there are quite a lot of senior management investments we have done for the growth in the next 3 years, accelerated growth in the next 3 years. There is expected to be an investment impact on our margin. We have guided that in the beginning of the year. But compared to that, we have done better. Compared to whatever guidance we have given, we have done better. And the next few quarters, the investment will continue. However, thanks to the rupee depreciation, we will be able to compensate that to some extent. And the revenue growth in terms of volume growth and the demand situation may also help us to manage the margin to some extent. But broadly, their margin impact was mentioned by us last quarter.
Okay, definitely. Other thing is that you have highlighted offshore mix. It is really going well, and we are seeing a steady growth in here. It is around 74% versus last year's 68%. So please elaborate, how are you looking at this, and what can we expect more from the offshore mix?
Very good question. The offshore mix is better for us every quarter, 2% change. But I think this is a little aberration because of the visa situation. That appointments are taking a long time, and there is quite a lot of challenges still on the visa front. If this thing settles down and that travel resumes much stronger, we believe that offshore percentage will come down and onsite will go up. It has to go up, but it may not go up to the extent of what it was earlier, like 40%, but it may somewhere settle in the middle. We can't predict it now, but in the coming quarters, I think onsite will increase a little bit from the current situation. There will be a steady increase towards somewhere in the middle level for the onsite offshore. We expect this to happen in the next few quarters. But this will, in our view, this will be compensated by the increase in the revenue, what we are going to get, it is going to be on-site, as well as our other leverages on the revenue growth, volume growth overall will also compensate this impact.
Okay. Other thing is that retail contribution has been really declining in segment-wise performance. If we see, how do you see this? And are you having any plans to make a support in this revenue because retails are really going low?
Not exactly. Actually, this is an aberration.
Okay.
One quarter just a 1% change. Some projects got over, so this is the change that has happened. But retail, we are not seeing. We believe that retail will continue to have high demand, particularly customer-facing portion of the customer experience-oriented investments continue to happen in retail. So we believe that retail will continue to grow, and this will be a strong market for us because we are very, very strongly positioned in retail. Because almost like 14%, 15% of our revenue comes from retail, both essential, non-essential together. And we believe that this will continue to be there, and the next few quarters, the changes in the retail will happen. Growth will come in retail.
Okay, sir. Definitely. Other thing is that we would like to understand is this digital revenue at 73% and the platformation revenue is at 25%. What do you mean by the exact platformation, and how does this impact to our business?
Yeah. Platformation is what we have explained. We have platform. So whatever revenue we get, because the platform is also implemented for the customer, but we are doing other services to customer. Whatever is the revenue I get out of because of the implementation of platform is what we call it as platformation revenue. And that will continue to be there, but it may decline in the coming days is what is, we expect, because other revenues are also growing very, very strong, stronger than data and cloud. It's growing much, much stronger than the platform oriented, because all our platforms are dynamics related platform. And we believe although dynamics is growing well now, data and cloud will have faster growth than dynamics. So we expect a portion of platformation revenue to moderate or stabilize, and then little drop in the platformation revenue in the coming days, coming quarters. However, on the digital front, overall digital services we have defined that digital services tend to go up because data and cloud is also part of digital services.
Okay. Let's talk about the attrition and hiring. We have seen that in industry there is a scenario where attritions are really going high and hiring also. Please share both the situation.
Yeah, this year we have a campus hiring plan. The rest is basically a replacement kind of a situation. This quarter, the fresh hiring, the net hiring was a little. It was about 50 people total net hiring. The reason is because our attrition has come down. So the replacement attrition at the lateral level has been a little slower. But campus hiring last year was around 400 numbers. This year we are expecting around 550 to 600 campus hiring. So the campus hiring will increase in the coming next few quarters. There will be a good amount of addition to the manpower because of campus hiring. On the attrition rate, we continue to engage. We continue to see what is that situation. We expect it to stabilize soon. From next quarter, the stability can come. But we have to wait and watch because it's an industry issue. It's not that we are only having the challenge. It's a whole industry issue. I think this will come to a stability soon.
Okay, sir. Other aspect from our international business I would like to discuss is that the inflationary situation and discussions of recessions in global economies. How do you look at your business perspective? Do you see the recession is impacting the IT sector as a whole or our business in fact, or how are you looking at how is the sentiment of clients right now?
Actually, the demand scenario has not changed compared to last quarter. The demand has continued to be very, very robust. So we are not seeing in the ground any impact because of this, whatever we are hearing on the recession or inflation or other thing in the ground. This is generally reflected in case of delay in getting the contract closures, reduction in the size of the contract, price discounts, price decrease, reductions, and all these things. But we continue to get price increases, and the demand scenario is very, very strong. We are not seeing any of these things in the at present. So in the we see that the demand situation will continue to be very, very strong. There are supply side constraints continue to be there that we will have to take as an industry. We have to address that now.
Definitely. So, lastly, if there is any guidance you would like to share, I would like to request you to share any kind of guidance, sir.
We give a qualitative. We said in the beginning of the year, we
Yes.
will continue the same qualitative. We will do better than last year, what we have mentioned. And we have also given that our EBITDA margin percentage, we have done better than that in this quarter. We'll have to see how the investments unfold. But we see very, very strong demand scenario, and we are expected to grow in the top echelon of the industry.